What is up, my friends? Good morning. Well, it's a pretty crazy week, and I want to thank you for joining me. I'm battling a little bit of a cold, so apologize in advance for the voice. And as I'm saying that, I forgot to plug in this microphone, but we're going to do that live on the air. So I'm just going to plug this one in so you get some better sound coming out of here. The lav mic. Anyway, good morning, guys. So sorry I haven't been on as much this week, battling this little cold. So been a little bit rough, and on top of that, I didn't have Wi-Fi at home, so this was pretty interesting. Our Wi-Fi went out. I was trying to figure out the reason. The router was working, the modem was working, everything was good, and the Wi-Fi just wasn't working as I plug in the mic. And so got on the phone with these guys. Turns out we had a blown power block. Be a lot better. There we go. Hopefully that's better. If that's better, give me a thumbs up. And on your way in, guys, give me that thumbs up. Subscribe to the channel if you're not already. So anyway, got this really cool guy on the phone from our internet provider, and it turns out there was a blown power thingy box that was in the garage, not even the modem. So modem was on, we had Wi-Fi, but we didn't. So 2 days at home without Wi-Fi. And I will tell you the most interesting thing about that is actually like how many devices are plugged into Wi-Fi that you don't even realize. So like, you know, for everything from like the Ring camera to the TV, by the way. So before, and by the way, guys, today on the show, we're going to talk about all the madness and all the craziness that's going on. There is blood in the streets. People are going nuts. The stock market, the crypto markets, the basically everything markets are all having a really hard time right now. So we're going to talk about all of that kind of stuff. We're going to talk about real estate. We're going to talk about mortgage rates going up. And of course, we're going to talk about stocks and crypto and the pullback in pretty much every market. Inflation, CPI numbers just came out yesterday. We're going to talk about inflation. We're going to talk about all those things. So I was telling you about my Wi-Fi going out here at home, just a cool, not a cool story, but you know what happened was one of the transformers or the power block was blown. But the craziest thing for me about this was how many things are plugged into our Wi-Fi at home. So I never realized how much stuff is run by the internet nowadays at home. I mean, my sprinkler controller, my Alexa, the Ring cameras, and doorbell, by the way. So people were like knocking on the door and they're like, we've been here for 10 minutes, where you been? And I'm like, I guess the Ring is controlled by Wi-Fi, which is pretty crazy. And then we're like, okay, but no big deal. We can still sit down and watch basketball. Well, no, because we have DirecTV Stream, which is through the internet as well. So everything's powered by Wi-Fi. It's pretty crazy. Anyway, guys, let me take a drink of water because this cold has really been beating me up, and it's hard to talk too long. So we're just going to dive right in. Let's talk about everything that's going on, guys. So we're seeing a huge pullback in basically every market that you can think of, right? So from stocks, which we're going to talk about, to crypto, and then potentially to real estate. And the CPI numbers came out yesterday, which I do want to talk about for just a second. On your way in, guys, thank you so much for hitting that like button. It shows the video to more people on YouTube, which is great. If you have comments and if you have questions, throw them in the chat box and I will put them up on the screen and I will answer them. So Reva, thanks for joining us today. And then we got 14ELG. Good morning from California to Texas. That's my journey. Left California, came to Texas. Never looking back. No regrets. So anyhow, guys, the CPI, excuse me, the CPI numbers came out yesterday, and while they came in a little bit better than the month before, so the month before was 8.5%, came in at 8.3%, that doesn't necessarily mean that inflation is getting better. What it means is that it's 8.3% over the prior year. So I want you guys to really understand that is still extremely, extremely hot. 8.3% inflation is very, very high inflation and actually worse than expected. So they were projecting an inflation number of 8.1%, and we got 8.3%. So it's higher than it was are higher than expected inflation numbers. Now, the markets have been pulling back all across the board because of all this, and of course, we know that that includes, stock market, S&P 500, NASDAQ, and then also crypto. So let's kind of take those in succession, but let's take a look at some of our comments. I don't know how long I'm going to be able to talk today, guys. Love you guys, but it's getting harder. This cold is driving me nuts. Henrique, thanks for being on today. Welcome to the broadcast. We got inflation is getting worse and worse. Just look at food prices, gas, and housing. Okay, so let's talk about that, guys. So, yes, inflation, again, 8.3% CPI number, right? So gas just hit its highest prices ever, and that was recently, I think as of a couple days ago. We know food prices are up. And then housing prices, we are going to talk about. So don't go anywhere. We're definitely going to talk about real estate. As you know, that's my favorite topic. So we're going to talk about real estate in just a second. And that's something that I'm heavily involved in. And so I can definitely speak to that. So, so we're going to talk about that for sure. Okay, 14 ELC. Oh, thanks, man. Or thank you. Only some Waffle House will help comfort this rug pull. I love your vids. Thanks so much. Appreciate it. And then Claire, welcome to the broadcast. Claire says, we are seriously in a recession. Everyone needs to start planning. Worst administration ever. Yeah, so, I think that there's definitely a huge pullback right now in everything. And so, everyone is talking about, we are, in a recession or likely recession coming, but the markets would indicate that we are in one now. We're starting to see some layoffs, some hiring freezes, and some stuff like that, but not everywhere. And Oscar, what is up? Thanks so much for being on the show today. There's Oscar. Oscar, just because it's your first time on the show today, we're going to give you a big round of applause. There it is. Thanks for being on. So, Oscar says, Texas is hot, and Texas is considered a separate market than the entire U.S. So, guys, I want to talk about this in relationship to real estate because, real estate is very local, and we're going to talk about real estate today. And we're going to talk about, what I think about the real estate markets across the board, but this actually applies to a lot of different things. So, the economy, there are macroeconomic indicators which kind of affect the entire country, and then there are microeconomic indicators that affect local markets, like, for example, Oscar's talking about Texas, right, or California, or certain other things. And most of these things are affected a lot by supply and demand. So when it comes to real estate, interest rates are very high right now. They've raised from 3% to over 5%, but that is very high only in relation to the 3%, not in relation to the 18% where they were in the early 1980s when, for example, my parents bought their first house. When I bought my first house, interest rates were at about 6%, and we thought that was great. So it's all relative based upon what you're doing. There's a lot of doom and gloom out there, guys, and this was a big joke what I said here. I'm a doom and gloom kind of person. Catherine, welcome to the broadcast. Thanks for being on. So, there's a lot of doom and gloom out there. There's a lot of people calling for it's the end of everything, and the world is coming to an end, and the stock market's going to go to zero, and real estate's going to crash, and all this kind of stuff. And what I want to tell you guys is that, remember, fear sells. Fear and all of these kinds of things sell in the media. And so that's why you'll never see a feel-good news station, because they're not going to get any ratings, and they're never going to sell any advertising. And so that's why you see all this doom and gloom. Same thing on YouTube. I mean, hey, what do I know? I'm doing this on YouTube, but same thing on YouTube, guys. The headlines that say real estate's crashing do way better than the ones that say, hey, real estate will be just fine. I've tested this out. It's true. Unfortunately, right? But I want you guys to put all of this into perspective and just realize that we have been in a huge uptrend for quite some time. Let's look at some charts real quick, just so that I can actually show you what I'm talking about and not just tell. So if I look at the stock market, let's just start with the stock market, and let's start with the S&P 500. Let me pull this up for you guys. Okay, so here's the S&P 500. So if you look at the last month, you're like, oh shit, look at the S&P, it is getting crushed. If you look at the last 6 months, you're like, it's getting crushed. Year to date, we're down 18%. Now, historically, 18% is not a crash, guys, because we've had way bigger drops in things like the S&P 500 and the NASDAQ. And the S&P is the global market. I'll show you the NASDAQ in a second as well. But then watch this, guys. What I like to do on all this stuff is I just like to zoom out and take a look at what's gone on. So look at the 5-year, guys. Look at the 5-year. The 5-year, we are up 64% on the S&P. Now check out what's happened during that 5-year time period. We had in 2018 a little bit of a drop, not much, from 2,800 down to 2,500. That is what, about 10% or so. Okay. Then we had another drop here before 2019 from 2,900 to 2,400. That's also about 15, 16, 17%, something like that. So from September to December. Then we had a run up. And then this, of course, right here is the COVID crash. Okay, so COVID, we went from 3,380 down to 2,300. That's a pretty big drop. And then we had this huge run up. And now, of course, here is right here the drop that we're seeing right now. But again, put this in context, right? Listen, guys, can't go up forever, right? The markets don't do that. They are cyclical. Every time you see a huge run up, you're going to see a little bit of a pullback. It's just natural. It just happens. We have a lot of stuff going on in the world. We got supply chain issues. We have all kinds of stuff happening. We have currency being devalued because of all the money that was printed. So there's a lot of stuff that has happened. And if you expected the market to just continue to go up on fire forever, that just never happens. I've been through a few of these cycles already, and so I know, and I've seen it. And if you've been through it, you know that it just doesn't happen, right? So we've had this pullback here. How long it lasts, where it goes, I don't know. It's definitely not a crazy crash that's going to annihilate the market, but we have seen, like I said, year to date, here we go, or let's do 6 months, 16% pullback in the last 6 months from the highs, which were at the end of the year. That's the S&P, okay? Let's take a look at the NASDAQ, because the NASDAQ is our tech stocks, right? So our tech stocks, ooh, they're up today. 0.058%. Let's look at the 6 month as well. So 6 month in the NASDAQ is down a little bit more, 30%, but that's because our tech stocks and things like that have definitely been hammered. But their valuations were so high to begin with, guys, that this was, probably pretty expected, okay, 28%. But then, once again, look at the 5-year, guys. The 5-year, 85% return. So as I've said with almost every investment, it's not really timing the market, but it's time in the market. So as long as you have a long-term time horizon with a lot of these things, you'll pretty much always be fine. Because look, you bought anywhere here, you're fine. Okay, even if you bought at the height right before the COVID crash, you're still fine because you're way above where you were. Now, we have seen this big decrease, of course, but again, that's what we're talking about, and that is the reason. So the markets are pulling back because the valuations were extremely high, and we have had a lot of things happen. We've had the crazy high inflation, which we talked about, that came in at 8.3%, not 8.1%, which was expected. That's a little better than the 8.5%, and we think, hey, have we seen the highest inflation that we're going to see? I don't know. We'll see that, right? And so we'll go from there. Hey, Riva with the super sticker. Thank you so much, Riva. Let's add that to the broadcast and let's give the super chat. Super chats are available, guys. They do support the channel super for chat. Sure. So all that goes back into, I don't know, camera gear and all this kind of stuff that we're doing. So Riva, thank you so much for the super sticker. You can do that over there. Let me grab a sip of water, guys. Man, this cold is driving me nuts. All right. Let's turn our attention real quickly, guys, to crypto, and then I promise we are going to get to real estate. So don't go anywhere if you're waiting for the real estate chat, especially you, Oscar. Don't go anywhere because I'm going to rely on you to tell me some stuff because Oscar is a real estate agent here locally in Dallas. So Oscar is going to tell us what's happening. Okay, so let's take a look at crypto, and let's go to Bitcoin. But before we do, guys, we had a pretty crazy situation in Bitcoin. As I pull up the charts here, we had a pretty crazy situation in the crypto market, and that was with a coin called Terra. And I'm going to explain this to you just slightly because this might be a little bit above my pay grade, but I do understand kind of what happened. And so I want to explain this to you real quick. Let me pull this up to show you. Whoop, wrong one. This is our Bitcoin chart, but I am going to show you Terra. So Terra, there it is. Oops, not Terra UST, but that was part of the problem. Terra, there it is. Okay, so let me show you guys Terra. So guys, Terra is a cryptocurrency that was trading at about $90, okay, $90. And what happened here a few days ago is that Terra is an algorithmic coin that's tied to its own stable coin. And apparently what happened was the peg to the stable coin got broken. And so basically, you know, cryptocurrencies are an algorithm and they're a mathematical formula. And if the tether there breaks, then you have a big problem. I'm giving you like the total 30,000 foot view. But the bottom line is that Terra crashed, and this is really a crash, from, you know, $90, 97, it was almost $100, you know, then we were at about $84, all the way down to, I believe it is at, where are we? 2 cents. So basically it went to zero, okay? Basically it went to zero. And so if you had, you know, any number of these coins, you were completely wiped out. And you know, this I think will speak to a couple of things, guys. And I do, you know some people who were in this market, and it's not a good feeling. And so, you know, this speaks to a couple things. First of all, cryptocurrency, all investments are risky, but cryptocurrency especially, very risky investment because it's, you know, it's just tied to this mathematical formula and what is going on. So one of my mentors always told me, you know, invest in the industry leaders. Invest in the industry leaders. So if you're buying a stock and you want to buy an airline stock, buy the ETF or buy the industry leader. ETF is just the index fund, right? And this is one of the reasons, guys, when I had a long conversation with someone the other day about buying individual stocks. This is one of the reasons that I don't actually do that. I buy index funds. I buy, you know, baskets of stocks. I buy a whole sector if I believe in a sector. Because when you buy individual stocks, it's a lot riskier because that company or that stock could have a situation that's really bad. Now, this is a little different because this is a cryptocurrency, but this actually set off a huge issue because what happened was Terra actually was tied to Bitcoin. And so when it crashed, they had to sell a ton of Bitcoin in order to cover essentially what is like their margin, right? And so to do that, they had to sell a bunch of Bitcoin. And so what happened with that is the price of Bitcoin came down, because if you sell a ton of it, then the price is going to come down. So let's go back to Bitcoin now and let's take a look at this, because I just want to show you what's going on in the markets. So Bitcoin is generally down a ton. We were at, let's see, our high was almost 70,000 and we are at 28,000 right now. So less than 50%. But what I will say, guys, about Bitcoin, and you guys, thank you for being here. I appreciate it. Reva says that Steven Crowder talked about the volatility of crypto yesterday. Yeah, it's very volatile for sure. Very, very volatile. And so when you look at the Bitcoin chart, here we go. I was trying to get it for you guys. Whoops. There we go. Okay, so when you look at the Bitcoin chart, guys, it's really a macro picture as well. So, you know, on the 1 month, excuse me, with the markets really pulling back, it is down. You look at the 3 month, it is down. But now let's look at the entire chart, and let's kind of start around 2017, right? And you see how much it's up. You know, we are up big time. We had this big run here, pull back. Up, pull back, up, pull back. So up, pull back. So Bitcoin does this all the time. Okay, now this is a pretty major one, and as you can see here, I'm not a technical analyst or anything like that, but as you can see, we've kind of crossed this little support level here of 30,000, because we had been trading, you know, for about a year somewhere between 30,000 and 60,000, 30,000, 70,000, 30,000. So have we seen the lowest point for Bitcoin? I mean, Bitcoin came all the way down overnight last night down to 26,000. Have we seen the lowest point? What do you guys think? Let me know in the comment, or in the chat box, I should say. Have we seen the lowest point for Bitcoin, or is it going to continue to pull back? Now, I personally, and I've talked about this on the channel, I am a big believer in Bitcoin. I think that Bitcoin solves a lot of problems. I think that in the future, Bitcoin has a lot of applications and it will do just fine. It does this all the time. It comes down 70%, 80%, and then comes back up. So if you're investing in Bitcoin, you got to be ready for that. And for that reason, guys, I will tell you that my strategy with Bitcoin is dollar cost averaging. So I don't buy in huge chunks. I buy a little bit every day through a program called Swan Bitcoin. You can check that out in the description if it's something you want. And really the way I look at it right now is Bitcoin is really on sale. So a lot of people, when it was at 70,000, were saying, oh, I wish I could have bought it at 30. Well, here's your chance, right? And I guarantee you, a year from now, 2 years from now, people are going to be saying, oh, I wish I would have bought it at 28 or 26, right? Because they say that every single time this happens. So there are too many institutions, there are too many billionaires that are involved in crypto for Bitcoin to go to zero or anything crazy like that. The fear and greed index of Bitcoin, which I monitor, is down at a very low point. So that would tell you that this is probably a good time to buy, but again, not financial advice. So guys, we got a high CPI, we got interest rates going up, and we'll take a look at the interest rate chart. We got stock market coming down. What about real estate? Let's get to real estate, guys. Before we do, let me grab some water. Man, this cold is driving me nuts. Thank you for tuning in and for being here. It is hard for me to talk for a long time today, but I definitely want to jump on because there's so much craziness going on that we definitely need to talk about it, right? So let's talk about real estate, guys. So real estate has been on a big upswing for quite some time. We've talked about it. I've shown you the charts. I can show them to you again. And, it's been going up for a long time here. And let's go ahead and share this. So check this out, guys. Let me zoom this way. Whoops. Okay, there we go. There we go. And boom. Okay, so check this out, guys. So real estate. Here are our median house prices. Okay, median home prices 1960 coming up all the way to 2022. So as you could see, big uptrend, big uptrend here in real estate, especially here in the end. So let's zoom in, guys, and I'm going to talk about the different markets that we've had. So let's back up right here. 07, most people are familiar with this. This is when I got into real estate right before this, and we saw this big run up and then we saw a big crash. Now, the crash was, I'll show you how much, from 257,400 down to 208. So on a national level, okay, that's about 25%, okay? In some local markets, that was more like 40 to 50 to 60%. And this is why I wanted to talk about the fact that real estate is very local. Now we've seen this huge run up again, especially in the last 2 years since COVID. Just since the COVID crash, we went from 322,000 on a median home price all the way up to 428,000, 322 to 428. Oscar just put up a great stat for us here, and I'm going to answer all these questions, guys. So thank you so much for putting them up here. So Oscar put up a great stat. April 2022 MLS, this is in Dallas, Fort Worth, is up 23.6% year over year. So guys, here's the thing. That cannot continue forever because affordability goes down, and as housing affordability goes down and interest rates go up, what happens is you get less demand in the market. Now, I've kind of put up this very fancy chart for you guys. If supply is down here and demand is up here, what happens is you get an upward pressure on pricing. With interest rates going up by a couple percentage points, what happens is demand is going to come down, right? Now the question is what's going to happen with supply. If people start to panic sell, if people start to dump their house on the market, supply will come up and then we'll get a more balanced market. Now if demand dips below supply, then what we get is we get a buyer's market and we see some downward pressure on pricing. Are we going to see that nationally? I think that in a lot of markets we are. Texas, where I am and where Oscar is, I will tell you that I'm extremely bullish on Texas. Let me tell you why. There are a ton of companies coming here to Texas. There are a ton of people coming here to Texas. That drives demand up, right? And so if demand keeps going up in an area like Texas, even with the rising interest rates and not enough housing because the builders are trying to catch up with that, you, excuse me, you still get an upward pressure on prices. Now, it may not be Oscar's 23.6%. That may not happen again. Maybe it's a 10%, maybe it's a 5%, maybe it's a flat market for a little bit because we are starting to see some hiring freezes and even some layoffs at some companies like Amazon, things like that, right? So maybe we see a little bit of a flat market. Maybe we see a smaller increase, and Oscar's giving them some more gold nuggets here, which is month supply of inventory. So Oscar, this is my favorite chart in real estate. And by the way, guys, if you're just joining us, make sure you subscribe to the channel. I appreciate you guys, and hit that thumbs up so YouTube shows it to more people. So month supply of inventory is my favorite chart in real estate. I'm going to tell you why. Because month supply of inventory basically tells me everything I need to know. Okay? It tells me how much supply is there in housing if no new houses come on the market. How long is it going to take to sell out of current properties? And what Oscar has shown us is that month supply of inventory in 2019, which was still a hot market, right? This is still a hot market. Oh, I went away from my chart. Look, this is still a hot market. It's not as hot as this, but it's still a hot market, right? And so month supply of inventory has gone down to 1.1. That means there's only 1 month of inventory available for people to buy before we sell out. Now, anywhere between 3 and 6 months is a balanced market. That means it's taking like 30 to 45 days to sell a home. And that's pretty normal, right? And we've kind of forgotten about that because we've been in this, 1 month environment for so long, houses selling in 4 hours, but actually 3 to 6 months supply of inventory, somewhere in between 30 and 45 days, average days on market, that's pretty normal, right? And so we're not seeing that yet. We may see that, anything above 6 months supply of inventory, now you're talking buyer's market. Anything below is a heavy seller's market. And so what Oscar is saying very brilliantly, thank you for being on here, Oscar, I appreciate you, is that right now we're in a very low supply of inventory. And Oscar, who's an agent here locally, says that we're struggling to find homes for clients. Now, guys, these things can change pretty rapidly on us. Real estate, remember, is not like a stock. So stock market can change in an hour, in a minute, in a day. It can drop 5%, 10%. That doesn't happen with real estate. With real estate, we see gradual things happen because the real estate market needs to catch up. Remember, we're also on a 60 to 90 day cycle with real estate, right? So for example, if rates go up 2%, you're not going to see that for the next 30, 60 days because there are currently homes under contract where people put them under contract 30 days ago at 3% or 4%. And then now the rates are 5%. So it takes a little while for that to come through the market. And so what I want to say is that there are certain high demand areas that are in high demand because people are going there because there's a lot of demand for that space, like Texas. A lot of people are migrating from California, Texas to Florida. Excuse me, guys. Sorry, I'm just battling this cold today, right? And so because of that, those areas are in more of a high demand. Areas like LA, even though the housing market there has been going up forever, I believe are in trouble because not only are interest rates higher, but people are leaving, right? And companies are leaving. And so because of that, what you'll see is you'll probably see a pullback there. Now in Texas, guys, I'm not, I'm not just having my rose-colored glasses on. I think that the higher rates will definitely cause an issue, but I believe that'll just cause us to have a more balanced market in places like Texas and Florida. The Florida condo market is something interesting that gets hit pretty hard usually in a recession, but we will see what happens. RC says, keep up all the nuggets, Oscar. So you got lots of fans here, Oscar. And then Oscar also put up some stats for us that the median days on market 2019, which again was a good market. It was strong, 37 days, 2022, 6 days. So guys, the 6 days on market, the 20, what did Oscar say to us? It was 20-something%, 24% year over year appreciation. That cannot continue. But just because that doesn't continue doesn't mean that the real estate market is going to crash. So we had a great question here from Mario. And Mario, the question is, he's a first-time buyer. Should you buy now or should you wait 8 to 12 months? Also in the Dallas-Fort Worth area. Well, we're going to have to hook you up with Oscar for a real estate chat. But here are my thoughts, Mario. And I've looked at this, for so long in terms of real estate that my answer is always, it depends on what your goals are and what you're doing. So if you're buying a first-time house or you're trading up and it's a residence for you and your family, then my thought is always time in the market, not timing the market. And let me show you why I mean that. First of all, if interest rates go up another percent or another 2%, the market would have to drop by 10 to 20% for you to recapture that interest rate increase. So what I mean by that is if you're getting a loan, and obviously if you're paying cash, it doesn't apply. But if you're getting a loan, okay, every increase by 1% in interest rates decreases purchasing power by 10%. That's an old real estate rule, right? So if you said, for example, hey, I'm going to wait. Okay, let me show you this chart again. If you said, I'm going to wait, what you're anticipating is that you're going to be able to time the market perfectly and that the higher interest rates aren't going to gobble up those gains. So if you go back, guys, I always use this 2007 as an example. I bought my first house in 2004. Okay, so let me zoom in even more. 2004, somewhere around here. So we were still on the way up, but this was coming. Obviously, I couldn't predict that. I knew at some point we were going to be in trouble, but I didn't know when. And so I bought in 04 with like a 5-6% interest rate. Well, if I said instead, hey, should I wait, should I wait a year? Well, it would have been higher. Should I wait 2 years or 3 years? It would have been even higher. I would have had to have waited, okay? I would have had to have waited 5 years till 2009 to get the bottom of the market. And I would have had to have timed it perfectly and bought right at the bottom. And then I still would have taken me $217,000, still would have taken me a lot more to get to where I wanted to go till 2009, end of 2009, 2010. So in that time period, I would have missed out on, not only the appreciation of my house, but the mortgage interest deduction. If it's my primary residence, I would have missed out on taking depreciation on the property and all the other tax benefits that you get with real estate. So my answer is, if it's your primary residence, if you can lock in a great interest rate, obviously would have been better to lock that in at 3%, but if you can lock in a great interest rate right now, even if you take out an ARM and then decide to refinance later and you find a great house, my advice is don't wait. There really is no reason to wait. On top of that, you're going to be renting, and rents are going up even more. Now, if you're buying an investment property, obviously you just have to build in some more margins, right? So let me show you this chart again, right? I don't think this is going to continue forever, obviously, right? So we may not see this, but we may see a little bit more of a flat increase. We may see a little bit of a pullback like we saw maybe over here, right? But we're not going to see a huge crash of, even here it was 20-25%, right? So I just build in extra margins into my analysis if I'm buying an investment property so that I know exactly what I need to do with real estate. So guys, my message today to you is don't believe just like when things are going up and everyone's saying it's going to go up forever, when things start going down, everyone says that's it, everything's over. Right? The truth and the reality is somewhere in between. Make sure you're doing your research. I appreciate you following me here. If you haven't yet, make sure you subscribe to the channel. We do these updates all the time, and also, of course, the regular videos, right? And then, of course, whatever you're doing with the markets, make sure you're staying informed. Make sure you're investing in yourself so that you can make the best decisions. But at the end of the day, guys, the reason I love real estate is that it's a tangible fixed asset. So for example, if you owned, a coin, a cryptocurrency that went to zero, that's it, right? But if you own real estate and the price goes down and you can't sell it, well, you can rent in it. You can rent it, or you can live in it. I combined my two thoughts. So there are so many different things that you can do with real estate that you can't do with anything else, that real estate has always been, and I think always will be, my favorite asset class. RC's got a comment for us. For main residence buyers, is it good to explain how paying down that principal helps you as you're going along? A lot of people don't understand how that works. Yeah, sure, of course. RC, great question. I'm gonna grab some water and I'll explain that. So guys, when you take out a mortgage, and that's a really nice question. When you take out a mortgage and you buy a property, let's just say you buy a property for $500,000, you put 20% down, that'd be $100K. You take out a loan for $400,000. Every month when you're making your mortgage payment, you're actually paying down a portion of your principal. So I can actually show you a loan amortization schedule, and I can show you that in real time. And let's go, let's find a good one. Here we go. Okay. This is a really good one. So let me show you this. All right. So watch this, guys. So RC, thank you so much for the question. It's a really good one. Whoop. There we go. Whoop, trying to get there. There we go. Okay. So let's put in our information. So we took out a $400,000 loan. Okay. Is that 400,000? Yeah, it is. And we took out a 30-year loan, 5% interest, okay? And here we go. So here's what happens. You have a $400,000 loan, and your monthly payment on that is $2,147. Now, the reason that I say that real estate has so many benefits, guys, is if you're renting, okay? There's an old adage in real estate that if you're renting, you're paying off your landlord's mortgage, which is exactly what you're doing, right? So there's 360 payments here. $2,147 is your monthly payment, okay? And then watch what happens. So as in the beginning of the loan, you're paying way more interest than you are principal. That kind of inverts, about halfway through, okay? But here's what happens. Of that loan, let me show you the schedule. You're paying $1,600 in interest in the beginning, okay? And you're paying $500 towards your principal. So $500 times 12 is $6,000. So every year you're paying off $6,000 of your loan, and that increases over time. And here's your remaining balance, right? So what happens is in real estate, you actually get a really nice dual effect because as you're paying down your principal, hopefully the property is appreciating over time, and so that spread is becoming bigger and bigger, right? So watch this. So let's say, you fast forward, I don't know, 5 years. Let's say you keep the house for 5 years. So your original loan was $400,000, and you keep the house for 5 years, so that would be 2027, May. Well, now you only owe right here. Oh, I didn't go far enough. There you go. Now you only owe $366,000 on that property on the original loan of $400,000. So you have paid off $40,000 of that principal, and on top of that, the house is probably appreciated. Even if you use average numbers of 4 or 5% times 5 years, it's appreciated like 25-30%. So now you have that spread. Which is why, again, for Mario's question, my answer is don't wait. Because if you wait, then that means you're either renting or you're living in your current house. Maybe you're wanting to trade up. You're not getting the benefits of home ownership and all of that other stuff. So, RC, great question. Hopefully that explains that. And you said adds to the, yes, time in the market, not timing the market, 100%. And that's exactly why. Because, you just, first of all, you never know when the bottom's going to be. You never know when the top's going to be. As you're paying off that, that mortgage, you're paying off your own principal. And so you're getting all of the advantages of real estate. Real estate has so many advantages that's why I'm such a huge proponent. Thanks so much for the feel good wishes, RC. And guys, on that note, I am probably going to leave you because talking is getting harder and harder, but I really appreciate you guys jumping on the broadcast today. Check out all the videos coming on the channel. If you're not, make sure you subscribe and hit the bell icon so you know every time I release a new video. We got 15 thumbs up today. Thank you for that. We had a ton of viewers, lots of great questions. Thank you for the super chats and the super stickers. I appreciate that. You guys help support the channel, and I will catch you guys on the next video or the next live broadcast. Thanks so much for being here.